All right, ready to dive in. Today we're tackling Mark Faber. You know, that global investor with a reputation for being a little, well, let's say unconventional.
Oh yeah, definitely not afraid to go against the grain.
Exactly. And you wanted more on his views about emerging markets. Well, we found this recent interview. And let me tell you, some of his predictions are pretty bold.
I bet. So where do we start?
Well, I think it's important to understand how he approaches investing. It's all built on this gloom, boom, and doom idea.
Gloom, boom, and doom.
Yeah. Essentially, he looks for opportunities where everyone else is panicking. Buys when things are super cheap and unpopular, figuring they'll bounce back eventually.
So kind of like high risk, high reward.
Exactly. And his background as an economist definitely gives him a different perspective, helps him spot those market shifts that others might miss.
So he's not just chasing the latest hot stock then, more like looking for hidden gems that everyone else has overlooked.
Precisely. But the question is, where does he see those opportunities?
Well, he's actually pretty pessimistic about the U.S. economy right now.
Really?
Yeah. He sees all this growth as kind of a facade fueled by debt that's spiraling out of control, growing way faster than the economy itself.
That doesn't sound too good.
He's worried that as interest rates rise, all those massive interest payments on government debt could really start to, squeeze the whole system.
Huh. That's a pretty different take compared to the general market sentiment about U.S. stocks. A lot of people seem pretty optimistic, but it sounds like Faber's not buying it.
Nope, not at all. He's actually really cautious, especially about what he calls narrow market leadership. Basically, too much reliance on just a few big companies.
Oh, I see. So like all your eggs in one basket, what happens if that basket breaks?
Exactly. He compares it to the nifty 50 stocks back in the 70s, these blue chip giants that everyone assumed would just grow forever. But then, boom, the bubble burst and people lost a lot of money. He sees parallels with today, especially with stocks like Tesla and Nvidia dominating everyone's portfolios.
So he's basically saying don't get too comfortable with those tech giants. History might just repeat itself.
Right, especially with all that reliance on government subsidies and stuff. He's not sure they're sustainable in the long run.
Makes sense. So if he's not so hot on the U.S., where is he looking? He did mention emerging markets, right?
Oh yeah, he thinks they're poised for a major comeback after years of, underperforming.
Interesting. And he specifically mentioned Latin America.
Yeah, he's really bullish on that region, particularly countries like Colombia, Chile, and Brazil.
Why Latin America, though? It's had its share of, challenges.
True, but he sees a ton of untapped potential there. Abundant natural resources, a growing middle class. He even mentions some governments becoming more market-friendly.
Sounds like a classic contrarian play, right? Going against the grain and betting on a region that a lot of people might still see as risky?
Absolutely. That's Faber style, right? Willing to go where others are afraid to, looking for those hidden opportunities.
And speaking of going against the grain, didn't he also say something unexpected about Hong Kong real estate? I thought he was bearish on that market for years.
You're right, he was. But now he's saying those stocks are super undervalued. Quite a shift.
So what's behind this sudden change of heart?
He thinks the market's overreacted to all the political and economic stuff happening in Hong Kong. Sees it as a buying opportunity for those who can look past all the negativity.
That's a bold call, I have to admit. But it seems like he's really seeing potential where others are seeing only doom and gloom.
Exactly. It's all about that contrarian mindset. He even talked about Korea, which I know you're particularly interested in.
Oh, right, Korea. What did he have to say about that?
He acknowledged their economic strength, but he did express some concerns about corporate governance and family control issues.
Makes sense. Those can be tricky areas. And it does tie into some of the work we've been doing, right? Trying to improve transparency and accountability in Korean corporations.
Yeah, definitely. It's an ongoing effort, and it's interesting to see how those issues are perceived by investors like Faber.
It's a good reminder that investing isn't just about numbers. It's also about understanding the bigger picture, the political and social factors that can influence a market.
Absolutely. Speaking of which, he also had some strong opinions about tariffs, a topic that always sparks debate.
Oh, I bet. What was his take?
He's pretty skeptical, to say the least, sees them as harmful to consumers and ultimately ineffective.
So more of a free market advocate?
Definitely seems that way. He even went into the history of taxation, emphasizing how complex it is and how government policies can often backfire.
He's big on the historical perspective, isn't he? Using it to understand market cycles and make investment decisions.
Oh, yeah, for sure. It's all connected for him. History, economics, politics, all part of the puzzle.
So we're getting a picture of a guy who's not afraid to challenge the status quo, right? Someone who sees opportunities where others see risks and who believes that history can guide us.
Definitely. But the question is, how do we actually apply all this to our own investment choices? How do we take these insights and turn them into action?
That's the million-dollar question, and it's something we'll explore in our next segment. Stay tuned. Okay, so we've established that Mark Faber, well, he's not your typical investor. He's got that contrarian approach. He's a little skeptical about the U.S. market right now, and he sees all this potential in these places that many people just kind of write off, But I want to get down to specifics. How does his philosophy actually play out in a real-world investing?
You know, it's really interesting how he connects all of his economic analysis to actual specific opportunities. He doesn't just make these blanket statements like emerging markets are good. He pinpoints certain countries, sectors even, that he thinks are ready to take off. And usually it's because of these factors that everyone else is overlooking.
So let's break down some of those picks. I know he was particularly excited about Latin America. He mentioned Colombia, Chile, Brazil. Those were some of his key areas.
Yeah, and it goes beyond just a general sense of optimism, you know what I mean? He's really drawn to these countries because they have these specific traits that fit his investment thesis. Like Chile, for instance. He's super excited about their lithium industry. It's booming, and it's all driven by that global demand for those electric vehicle batteries, you know?
So he's really looking ahead, identifying those trends that could have a huge impact down the line.
Exactly. And it's not even just about spotting potential growth. He's also looking for situations where he thinks, well, the market's just getting it wrong, mispricing things. And that creates opportunities for contrarian investors.
That seems to be the case with his take on Argentina, which I have to say caught me off guard a little. It's a country with a long, and I mean long, history of economic turmoil, and suddenly he's bullish. It just seems like a pretty risky move.
Oh, it's definitely a contrarian play, no doubt. But the interesting thing is, he's not just betting on their natural resources, or even not potential. He's putting a lot of emphasis on the election of Javier Milei, you know, their new president.
He's a libertarian, right?
Yep, and Faber sees that as a major turning point.
So it's a bet on reform, on this idea that Argentina is finally breaking free from its past and embracing a more market-friendly approach.
Right. He thinks Millei's policies, all that focus on reducing government control, are going to create a much better environment for businesses, for investors, and it's that shift in sentiment, that belief that things are going to get better, that's drawing him to Argentina.
It definitely fits with that idea of finding value in unexpected places, right? Seeing potential where others just see danger. And that kind of brings us to another interesting example, his whole take on Hong Kong real estate.
It's a big one, and it came out of nowhere, you know, after years of being bearish on Hong Kong, warning about this overinflated property market. He's now saying those stocks are totally undervalued.
It's a pretty big U-turn, honestly. What's causing this change of heart?
Well, he thinks the market's just overreacting. All these political and economic challenges, the headlines, they've pushed things too far. He argues that Hong Kong still has all these advantages. It's a global financial hub, and that's not going away. And he thinks those strengths are going to win out in the end.
So he's betting on a rebound, a comeback story. It really is like that classic saying, be fearful when others are greedy, and greedy when others are fearful.
That's the essence of his approach. And it reminds us that markets often, you know, they go too far in one direction. When everyone's either overly optimistic or super pessimistic, that's when you get these opportunities to find assets that are mispriced.
But that takes a certain level of confidence, right? To go against the flow, make these big bets when everyone else is heading the other way.
Oh, for sure. Contrarian investing, it's not for the faint of heart. You got to be able to stomach the ups and downs, think for yourself, and stick to your guns, even when it feels like the whole market's telling you you're wrong.
But it's not about just being different to stand out, right? It's about doing your homework, having a well-informed view, and trusting your own judgment.
Absolutely. It's about thinking independently in this world of finance, not getting caught up in all the hype. And that's what makes Mark Faber so interesting to listen to, you know? He's not afraid to challenge the conventional wisdom and carve his own path.
He definitely gives you something to think about. But it's important to remember, he's not always right. Just because he's bullish on something doesn't mean it's guaranteed to take off.
Oh, of course not. Every investment carries risk. And that's why, you know, diversification is so important. Faber himself always emphasizes that. Don't put all your eggs in one basket. Spread your bets. Different asset classes, sectors, geographic regions, you name it. It helps manage that risk.
Makes sense, spreading things out a bit. So we've talked about Latin America, touched on Argentina and Hong Kong, but he also had some interesting points about Korea.
Right. Korea's a bit of a mixed bag for him. He sees the economic strength, the technology, but he's a little wary of those corporate governance issues, the family control of companies, all that.
And you've been pretty involved in that space, haven't you? Trying to make things more transparent, hold corporations accountable in Korea?
Yeah, it's something I've been working on for a while. And it's interesting to hear those same concerns echoed by someone like Faber. It's a real issue that can impact investors and potentially hold Korea back in the long run.
It's a good reminder that there's more to investing than just the numbers. Right? You have to look at the management, the culture, the whole environment.
Exactly. You got to go beyond the financials and consider those less tangible things that can really make or break a company's performance.
And speaking of factors that can influence markets, Faber also had some pretty strong opinions about government intervention, especially when it comes to tariffs.
Oh, yeah. He's not a fan, to put it mildly. He sees them as protectionism that ultimately hurts consumers and distorts the market, creates inefficiencies, slows down growth.
So he's more of a let the market do its thing kind of guy.
Definitely leaning in that direction. He even went on this whole tangent about the history of taxation, how complicated it is, how often these government policies end up having unintended consequences. He's a student of history, for sure. He truly believes that understanding the past is crucial for navigating the present and the future. He sees those patterns repeating in markets and economies, and he uses that historical knowledge to inform his investment decisions.
So it's not just about avoiding certain countries or sectors. It's about understanding all the big forces at play, the economic and political stuff, and how they might shape things.
Precisely. It's about recognizing that everything's connected. Something that happens over there can ripple across the globe and impact what happens over here. It's a big picture view.
This is all super insightful, but I have to ask, how do we, as regular investors, actually put this into practice? How do we apply that contrarian approach to our own portfolios without, becoming these globe-trotting experts?
That's the big question, right? And thankfully, Faber gives us some clues. He doesn't offer those stock tips or anything, but he does lay out a way of thinking about the markets, a framework for identifying those opportunities that align with his philosophy.
So there's a method to the madness, so to speak.
Definitely. There's a logic to his approach, a set of principles he follows. And in our next segment, we're going to dig into those principles and explore how we can adapt them for our own investment journey.
Sounds good to me. I'm ready to learn how to put some of that contrarian thinking to work. Okay, we're back. Ready to wrap up our deep dive into the world of Mark Faber and his, let's call it unique approach to investing. We've talked about his skepticism towards the U.S. market, his excitement about emerging markets, and that knack he has for finding those diamonds in the rough. But the question on everyone's mind is, how can we actually use this, in our own portfolios?
That's where things get really interesting. Faber doesn't give us specific stock picks, but what he does do is he gives us this really valuable framework for thinking about markets differently. He wants us to challenge those emotions, question everything, and really develop our own independent investment philosophy.
So it's not about copying his moves, but more about adopting that mindset, that critical thinking, and not getting swept up in the hype.
Right. And one of the key takeaways I got from his approach is knowing yourself. You got to understand your risk tolerance. Contrarian investing, it can be volatile, not gonna lie. So you got to be comfortable with those ups and downs. Think long term.
Makes sense. It's like you wouldn't try to climb Mount Everest if you're only prepared for a walk in the park, right?
Perfect analogy. And just like a hiker, you got to be prepared. Faber stresses doing your research, understanding the fundamentals. Don't just follow the crowd, Look beyond the hype and figure out what's really driving the value.
So due diligence is key. Don't just take headlines at face value. Look under the hood, so to speak.
Exactly. He also talks a lot about diversification, which is important for all investors, not just the contrarians. Don't put all your eggs in one basket. Spread the risk, different asset classes, sectors, geographic regions, the whole works.
It's like building a house on a solid foundation. It can weather any storm, right?
You got it. And that's where Faber's contrarian lens comes in handy. He tells us to look beyond the obvious to those undervalued areas that everyone else is ignoring, those markets, those sectors that are out of favor, maybe even beaten down. That's where those hidden gems might be hiding.
It's about having the courage to go against the flow, zig when everyone else is zagging. But not just to be different, there has to be a solid reason behind it.
Exactly. He reminds us that the market isn't always right. Sometimes emotions, biases, they drive prices away from their true value, and that's where contrarian investors can step in, potentially.
So it's about being patient, waiting for the right moment, not jumping on every trend that comes along.
Absolutely. And maybe the biggest takeaway is this. Investing, it's a journey. It's not a destination. You're always learning, adapting, refining your approach as you go.
It's about being open to new ideas, being willing to challenge your own assumptions, and never stop asking questions.
I think that's the thing we can all take away from this, no matter our investment style. Mark Faber, his way of thinking, it can help us all become more thoughtful, more independent, and ultimately more successful investors.
So let's wrap this up by remembering some of the key things we've learned from Faber today. Don't be afraid to think differently. Do your research, be patient, diversify, and most importantly, chart your own course.
Well said. Remember, sometimes the best opportunities are in those unexpected places. Happy investing.
And that's it for this episode of The Deep Dive. We'll see you next time for another deep dive into the world of finance and investing. Until then, keep learning, keep exploring.